Hello and welcome everybody. Today we're going to talk about one of my favorite ways to invest, dollar cost averaging. Let's get right into it. All right, let's begin with this chart. So this chart highlights two important concepts. The first is lump sum investing. So lump sum investing is when you put a certain amount of money in all at once. So when people are going to lump sum invest, normally they're saying, hey, I just got a bonus, I just got an inheritance, or maybe I sold my business. And you might want to put all that money in on the day that you receive it. Many people, though, are not totally comfortable with doing that because they always wonder, might there be a better time? Should I wait till the market goes down? I don't want to put money in today, then everything drops tomorrow. And so technically, if you put in money on January 1st each year over the last 50 years or so, you would have done better off by just putting in early all on one day. Okay. But I know as an investment advisor that many people are a little bit worried about doing this because they wonder, would there be a better day to invest? Should I wait and buy it later on? And so this is where dollar cost averaging can help. Rather than buying in all at once, you can divide your purchases on a regular basis and do so regardless of what the markets have done. So for example, if you put in money on every first of the month and every 15th of the month, this is going to create regular discipline for you in the investment process, and it's going to relieve you from having to follow the markets on a daily basis. So this chart shows hypothetical returns for an investor with an initial $100,000 investment in the year 2000. Dollar cost averaging would have helped to maintain the portfolio's value during the dot-com crash and housing bubble, since most of the portfolio would still have been in cash. Over time, lump sum investing would have outperformed due to the strong bull market. The question, though, isn't which one is objectively better at the end. It's which one will you allow you to stay invested, to not pull out of the market, and to feel confident the whole time. That's what we're trying to do here with getting you to invest. This might be top of mind for many investors since the market is near all-time highs. In fact, the S&P 500 has achieved 25 new all-time highs so far this year. But one thing you want to get used to is that during bull markets, the market's going to continue to achieve all-time highs very consistently. So by definition, as the market rises, it will naturally hit new all-time highs. This is what we should expect, by the way. Okay? So does it mean that the market is due for a pullback or that it's going to crash? No, absolutely not. The market is an information processing machine. So there has been a long bull market from 2009 to 2020. And we've seen many years that have experienced dozens of new highs. But that being said, being at these levels can still make people feel a little bit nervous. For example, in April, due to uncertainty around the Fed, there was a little bit of volatility in the market. But things have bounced right back in May. So once again, it's important not to watch every short-term market move and try to time your purchases. Just focus on getting your money in the markets and keeping it in there for as long as possible. All right, finally, this chart shows how important it is to just get invested. Historically, if you try to wait for pullbacks, it's probably going to backfire more often than not. So as it shows on this chart, like if you wait for a 5% pullback, it's tended to mean that when it does occur, that the market's already at a higher point. So it just would have been better to invest in the first place. So this takes us back to the idea of dollar cost averaging, which means, again, just putting money in on a consistent basis on a regular schedule. For investors who might be a little bit nervous about getting invested all at once, this can really help you to get started towards your goals while also overcoming the psychological and emotional hurdles you might be facing. So there's a lot more to this subject, and we've only just scratched the surface. But if you'd like to discuss this in more detail or get some help with your investing plan, we would love to speak with you. Just go to keepitsimplefinancial.com/talk, and there's a place there you can schedule time to get a complimentary consultation, and we're happy to review with you. So hopefully you enjoyed this, and we'll see you on the next one.
Subscribe now.